Good evening, everyone, and welcome to the second series in the Finding Funds for College webinar series. This evening, we are going to be talking about financing options. We are joined by Keyshawn Wilson at Freisenbruch Group. We are also joined by Roxanne Christopher, who is a representative of the CG Insurance. We have Luquita, Medeiros, and Paula, who have joined us from HSBC. And of course, our program manager at the Mirrors program, we have Kimberly Jackson. I will allow Kimberly to give us a warm welcome, and then we are going to get straight into our presentations because there's a lot of exciting information to share this evening. But thanks for coming. And Kim, I'm going to hand it over to you.
Yes, thank you, Alicia. And welcome, parents and students, to, as Alicia indicated, our second Finding Funds for College webinar series. We are glad you're here. You know, this was born out of our Peer Forward program when we recognized that, you know, we don't know all the resources available on our island for helping us go to college, saving for college, the financial literacy and planning for college. And so we thought, I know when I was a parent, both my kids attended public school, and I know it was a stretch for me. I learned from other parents, and I ran around looking and asking questions. And so out of that, we thought, what a better way than to provide the information to parents and students. And so that's what really birthed the Finding Funds for College out of our Peer Forward program. And Peer Forward is a college and career readiness program that we have at Berkeley and Cedar Bridge. So if you want to hear more about that, you can hit me up and we can talk a little bit about the Peer Forward program. But we're ready to get talking about finding funds for college. And as a result of our last meeting, I went and opened up my Bermuda Credit Union account today. So just looking at various options for us to save money. I do want to say to the students that are on here, if you are on here for co-curricular hours, you must stay to the end. You must complete the survey and you must indicate on the survey that you are interested in the co-curricular hours. Again, welcome. We are so glad you are here. And I'm going to turn it back to Alicia.
Thank you, Kim. So we are going to get right into it. We have Keyshawn Wilson, who is with the Freisenbruch Group. He is going to discuss life insurance as well as pensions. So Keyshawn, I'm going to turn it over to you. If you do have questions as they arise, they can be dropped in the chat. We will have a dedicated Q&A period at the end. But if you don't want to forget them, go ahead and drop them in the chat.
All right. Perfect. Thank you, Alicia, for the introduction. Good day, all. My name's Keyshawn. I am a senior life and pension sales advisor at Freisenbruch, and I'm very happy to discuss with you about this topic. It is a topic that I have grown to love because of the value that I can provide to you guys to help yourselves as well as your families, etc. So, finding funds for college. The objectives that we're going to discuss today are basically what an investment is, the kind of life insurance tools that are available, common misconceptions around how we can achieve our goals, the categories that we fit in, our income potential, and my favorite slide, our why factors. Okay. So an investment in a nutshell is basically an asset or an item that is purchased with the hope that it will generate income or appreciate over time. There are many types of investments, such as your time, your energy, your money. You must sacrifice something to gain something more over time. When it comes to money, you are sacrificing a portion of your income now to create more for yourself financially in the long term. There are also many different vehicles to do this. It could be an investment plan in which you use money itself, and every bit of what you invest appreciates in value, and comes back to you in some way, shape, or form. You could also use insurance vehicles to either create something from nothing or protect whatever it is you're trying to achieve should the worst happen to you. Now, let's look at life insurance to start. You have two basic choices with life insurance. Both protect you and your family, but they both have different features to meet your needs. With a term insurance product, you are sacrificing a portion of your end goal financially, so the goals that you have in the now can still be met if you were to die suddenly. For example, if I have a goal of paying my child's way through college and school, it cannot happen without my breath of life. So I would need to ensure that that still happens if the worst were to happen to me. With whole of life, it's more of a long-term protection vehicle used to transfer wealth upon death for far less money than you saving it yourself. The beauty with whole of life is that it is permanent. It has cash values attached to it that you have access to, that you could borrow from should you need funds for any reason, such as a college tuition. However, the cash values in a life insurance product is not going to be the most fruitful tool for you to gain while living. It's more designed for your survivors upon death. However, it could be used as a safety net feature if you are unable to access cash in any time, or if you need a little bit of extra cash to pay for a college tuition, you can fall onto a whole of life policy to add value to what it is that you're trying to achieve. After all, life still does happen. So, common misconceptions. In my opinion, knowledge and understanding has to be at the forefront of our decision making. If you know nothing at all, then you're not equipped to make the right choices. Some misconceptions that come with insurance as well as investments are, I am very good at saving money. It's too expensive. It must be a scam, which is by far my favorite. It sounds too complicated, or I am afraid of losing money. So let's put this into perspective. One of the main things that my clients say to me after meeting is, I wish that I knew this sooner. In my opinion, it's more of a scam to not have access to the right information or taking the time to find out. Had you knew earlier or took steps earlier, it would have been one, less expensive, and you would have had more time to build whatever it is that you're trying to achieve. So for example, if you decided that you wanted to save $500 a month for a college tuition, for example, over the next 20 years or however many years, it would be $6,000 a year. $6,000 a year, for example, in 20 years is $120,000. To save $120,000 is going to cost you $120,000 to do so. If you take the same amount of money and put it in something that appreciates in value, if you look at the results summary I have here, you take the same amount, put it in something that appreciates in value, like our personal retirement plan, with just a moderate rate of return, you end up with close to double what you would have saved in that time. Is that really expensive, or is that really a scam? I think it's more of a scam not knowing that it was that simple as making a different choice than trying to do it all yourself. If you pass away and don't meet the goal, a term insurance plan is designed to protect whatever goal that you have financially, and the cost associated will drop significantly, and it would also pay out more value because you would get the insurance value as well as however many contributions you got in your investment goal or your investment plan. So they work hand in hand with each other. If I decide I want to save X amount of money for my college tuition, it's only going to happen if I live to do it. If I don't live to do it, a term insurance plan designed to protect that goal is going to allow the goal to happen if you were no longer alive. You may not be able to live to see your kids go to college, but they will have been able to achieve everything that you wanted to do for them whilst you was alive. Now, in life, you have three types of people. Now, some of us already have the knowledge and have used it to create everything that we could ever ask for. Some people have been to school, did their research, and as a result, they can create what it is they want for themselves. Some of us trusted in subject matter experts to help them build a life aligning with their needs based on what they have going on. They've accepted they don't know. They went to get help, and as a result, they got help. Some of us who do not know and will never take the time to get to know or make excuse after excuse and create problem after problem as a result. If you believe that you just cannot build because there's always something in the way or something's always coming up, your reality is guaranteed to bring always something that gets in the way, and you're never going to be able to build. In my opinion, sound judgment is going to come from having the right information to make informed decisions with confidence. Regardless of where the information comes from, it must be the right information. So I do encourage people to come and discuss with subject matter experts about how you can make life easier rather than trying to, just do it all yourself without knowing better ways to do things. Now, your ability to earn is by far your greatest asset. The question is, what are we doing with our money? The cost associated with not having a succession plan is far greater than the cost of life with one. If you were to start working at the late age of 30 and make just 30K a year, you will have made over $1 million by the time that you retire at 65. The orange column shows all of your expenses. So that's your food, your rent, your mortgage, all of the things that you've had to pay for in life. This 10% shows what you have left to show for it. Now, if we go back to the smart way to try and save money, if you will have taken a portion of your disposable income, this 10% column immediately gets bigger. If you take a portion of your income potential and place it somewhere that appreciates in value, you yourself has now increased your income potential on your own without that promotion or the new job search that you're looking for, or that thing outside of yourself that you're looking for to increase your income. Now will always be the right time for you to take control of your own life by making better decisions and using better tools that are out there available for you. Now, everyone has a reason why they do anything, and it's called a why factor. Your reason behind doing anything plays a part in the lengths that you are willing to take to get it done. If your reason why is strong enough, there's nothing that's really going to get in your way, and it is that simple. If you are someone who already has a plan in place to meet the goals you've set up for your children, like financing college or getting them through the best school and education that they could ask for, you kind of have to protect that goal in some way, shape, or form should the worst happen to you. That's where a term insurance product will come into play. If I don't live to see the fruits of my labor, I have created a protection plan to meet the fruits of my labor should the worst happen. After all, you would still want your children to meet their goals or your goals if you were to pass. If you are unsure as to how you can make these things happen, all you would need to do is come to the right places to seek advice. I am very passionate about having conversations with people about how they can make their life easier. So please come speak to a subject matter expert and we can help guide you and show you steps to take that align with your goals. My aim is to take what you are trying to achieve for yourself and make that a little bit easier. And like I said, now will always be the right time for you to take control of yourself and your goals. That wraps up my presentation. If you have any questions now, if we have time for questions now, I'll be happy to answer them, or I can wait to the end of the session to answer some questions if anyone has any.
Thank you, Keyshawn. We do have a time for a few questions. If there are any questions right now, you can either type them in the chat or simply unmute yourself to ask.
Okay.
And just wanted to reiterate that the slides will be shared, so you'll have the contact details for each person that presents tonight.
I have a question. Is the 6% set for that example you said?
No. So the 6% is just my example of a moderate projection. Personally, I feel with our personal retirement plan that we have the least expensive plan of its kind on the island and the best performing plan of its kind historically on the island. So I personally believe you would see more than what I've illustrated. I just don't want to overshoot expectations when it comes to what you can achieve in that time.
Yeah, and people, that's pretty good. Even when you look at the Heritage Fund, what that's given back, that moderate figure, it's pretty good.
Yeah,
Mhm.
definitely.
Do we have any more questions? Okay.
Good evening. Sorry. I just want to ask, I'm a student at Berkeley right now, but in terms of a life insurance policy, like what would you say is the best time to decide to pursue one if you do, like in college or before you go to college or after college or something?
I would say it depends on your goals. If you are looking at it from a creation perspective and you would like to create something better at the end of the day for a lesser price than saving it, then now would be the right time. So if you would like to, let's say, for example, you have a goal in your mind, when I have my kids, I want to leave them $500,000 each, or I want to leave them $100,000 each. Now would be the right time to purchase that for far less money than saving the $100,000 each for your children, if that makes sense. So personally, my favorite plan that we have is the child plan. You can put a life insurance policy on your newborn child, set it up to where it's completed, the payments are completed in 20 years, transfer ownership to your child at the age of 20. They no longer have to make any payments on the plan because you've covered it, and they got a free ride through life insurance on a benefit that increases in value the longer they live. So by time they retire or by time they need money, or it's going to be far greater than what you've invested into the policy. So the earlier the better. From a protection standpoint, I would say as long as you're earning money, you would want to protect what it is that you're able to achieve or do with your earnings. So if you are earning X amount of money a year for the next 10 years, that's worth this amount. I would like to protect this portion of this amount for the next 10 years if the worst were to happen to me. So it's really dependent on the goals and the angle or what it is that you would like to achieve to tailor the best plan for you.
Okay, thank you.
No worries.
Okay, so was it
Oh,
another question?
oh, last question. I'm sorry. How about for a 17-year-old? What's basically what the young lady said, Ali?
Yeah. As far as life insurance or an investment plan.
Both.
So a 17-year-old obviously has less years, doesn't have much years to invest something for college. You may have to get a little bit more aggressive or invest a little bit more. However, an investment plan will do far greater than a bank account. So I still encourage you to put it in something that appreciates during that time. But when it comes to the life insurance thing, the same would apply. As a 17-year-old, if you're looking at it from a creation perspective, start now. If you're looking to protect whatever goals that they have in place financially or any type of goals they might have in place, then you could start now. But as long as someone is earning and has the ability to create, you want to protect whatever it is that you are going to create if you're no longer here. If you have the goal to create something great for a lesser price than saving it yourself, yes, it's a good time to start now through life insurance and investments.
Okay, thank you so much. I'll give you a call tomorrow.
No worries.
Okay, thank you, Keyshawn, and thank you for those questions. We are going to move on to Laquita and Paula at HSBC. But like I said, we will open the floor again for questions at the end, and Keyshawn will be there as well. So thanks, Key, and let's go on to Laquita and Paula.
Thank you.
Good evening, everyone. My name is Laquita Medeiros. I am a Premier Relationship Manager here at HSBC.
Good evening, everyone. I am Paula Marquez, and I am a mortgage specialist here at HSBC. So we're going to start. Can you see our slides?
You guys can see everything?
Yes, we can.
Yes. Is it big enough?
You could put it on
Yes.
slideshow so we don't see the ones on the side.
There you go. So this evening, we're going to start off with kickstarting your finances and managing your wealth. So with kickstarting your finances, the first thing we like to look at is understanding our spending habits. Spending habits, we all have them, but what can we do to keep those impulse purchases in check? One, we should understand our triggers. Two, delay our spending. Three, categorize our budget. And four, track our spending closely. So with managing your non-essentials, you should always review your transactions, cut what we don't use out, assess what we do use, and look for cheaper alternatives. So remember that even small amounts add up. So it's good to stay on top of everything that is going out of our account. So we should always be watching our account, monitoring our account, reviewing our transactions, making sure that we don't have duplicate transactions, making sure that the transactions that we do have are our transactions, because lately a lot of fraud's been going on. So I would recommend that we always should review our transactions. So 10 questions that we should ask ourselves before we buy something. Do we need it? Can we manage without it? Can we afford it? Do we already own something similar? Why do we want to buy this? Can I get it cheaper somewhere else? How often will I use this? Am I better off spending the money somewhere else? Will this stop me from paying for something that I need? Do I need it right now? Or do I need to research this purchase? Am I informed? So with your incomings and your outgoings, your incomings will be your salary, your wages, any sort of second income, bonus, investments, allowance. So it'll be any source of income coming in. And then your outgoings, we break them down to essential needs and non-essentials. So our essential needs will be our rent or mortgage, our food, our electricity, and our internet bills. Non-essential can be holiday travel, Netflix, going out, and takeaway food. Now, with creating a budget, first we need to know what our goals are. We should be recording where we are spending our funds, establish spending priorities, set our saving goals, and build a financial schedule. So with creating a budget, and this can be something real easy as just an Excel spreadsheet. So we should always start off with what our monthly income is. And then we should write down or list our essentials and then how much we've paid out on it. So if you look at this, and this is just to be used as a guide, the salary is $3,000. The essentials total up to $2,150, $2,150. The non-essentials add up to $315.99. So that leaves you with a net income, of $534.01, once your essentials have been paid and your non-essentials. So sometimes we need to look at what our non-essentials are and see, do we really need it? Do we really need Netflix? Some of us, yes, we do. But going out, so if we were just to look at what our non-essentials are and be more mindful of them, these are funds that we can save in the long run. Sorry, we're just trying. So here we have a household budget. that Laquita, you're gonna talk
So
about?
this is something that, good evening, guys. So this is something that we use when we want to help clients budget their finances on a monthly basis. So this is showing, so let's just say your income, like Paula mentioned, let's say is $3,000 per month. So you can put it in for throughout the whole year. So we'll calculate at the end exactly what your salary is, if you got any interest or dividends are being paid into, or let's say miscellaneous, which could be a part-time job. So you put in all your expenses. So let's just do the total expenses of 2,000. But you can actually break it down and put exactly here, like what are your expenses are: daily living, transportation, entertainment, health, vacations, if you want to put funds aside for that, recreation as well. So it has everything here. You can even change it and put something else in of what you want to put in there, which is awesome. So if you look down at the bottom, it tells you exactly what your total expenses are. We already have what your income is. So this is saying you have $1,000 left over. What I used to do when I used to use the spreadsheet is that I would change this to a savings. So I'll put in here, okay, you know, I'm gonna make sure I put X, Y, Z aside every month. And that way at the end of the year, it could tell you exactly what you've saved. So this is a great tool to use as well. All right, guys, just coming back to it. There we go.
So emergency saving funds. This is why it's important to save for emergencies, because we understand that life happens. So things that can pop up that we should have savings for would be car repairs, glasses, technology breakdown, a washing machine, emergency dentist bill, emergency home repairs, a mobile phone breakdown, unscheduled events, legal bills, and other. So we understand that anything can pop up. So this is why it's always good to have some funds aside. So when life happens and things pop up, definitely if you own your own property, if a water heater breaks down, all that type of stuff, your child hurt himself, got into a little bike accident, the bike needs to be repaired. These things are all stuff that we should be saving up for when that rainy day comes. And then building an emergency savings fund. We should decide on how much we need. We should start saving and make a clear plan and keep on top of it.
Hey guys, so this right here, the next slide, managing your debt. So you're looking at paying off your most expensive debt first. So this, whereas you're looking at, it could be your mortgage that you have, because remember your mortgage payments consist of principal plus interest. So meaning that let's say your mortgage payment is $5,000, you got a large mortgage out there, you just got it. You're saying to yourself that, just hypothetically speaking, that $3,000 is going towards the interest, which is the bank, and then the 2,000 is going towards your principal. So you're going to say to yourself that you're thinking that $5,000 is going towards your mortgage payment when it's not. So it's going to take a longer time in order for you to pay down your principal. With that said, you are able to do principal reductions at any time towards your mortgage. You just got to provide the bank 3 months notice in order to do so. You can also increase your monthly payments, and you don't have to provide 3 months notice. You can just do a written letter just saying, hey, listen, I want to move my mortgage payment from $2,000 to $2,500. That $500 extra is going to go straight towards your principal. And when you're looking at paying off your smallest debt, so this is if you have a car loan, if you have credit cards. So remember, any outstanding debt on your credit cards, you're paying 20.95% going towards the bank. So if you end up saying to yourself, hey, listen, I've got a credit card, I want to try to pay it off as much as I can, right? Then try to do that. When it comes to your credit card, there are points that come with it as well. So you're getting 1 point for every $1 you spend. Premier debit cards are a lot credit cards are a lot different. There's 1.5 points for every point you spend. So with your credit card points, they accumulate. You can turn those points into cash and put it back on your credit card. So that's another way where you're having your, let's say, your purchases work for you while you're using your credit card. It doesn't apply to your debit card, because your debit card, if you make a purchase, is coming straight out of your account. So, just to let you know when it comes to paying off your debt first. Debt consolidation. So let's say you have a credit card and you have a loan. And like, you know what, it's kind of hard for me to maintain both of these monthly expenses every month. You can always come into the bank. We can consolidate these debt, turn it into one monthly payment. So whatever method you choose, just try to repay as much as you can each month, as this will reduce the amount of interest you are being charged. Tips for saving: create a budget and stick to it. So even if you guys say to yourself, you know what, I can only afford $20 a month or a week, then that's fine, because you're saying to yourself, you're starting to put something aside every month. If you end up saying to yourself in 6 months' time, or even at the end of the year, and you see exactly how much you have accumulated, you're going to say to yourself, you know what, I've done 20, I could do 30, I can do 40. Just continue doing it, because you can do it. If an emergency comes up, you have the funds available there. So that way you can take it out of your emergency fund and you can use those funds, but continue to top up and putting funds aside every month. Normally, when you're looking at building an emergency fund, it should be at least 3 months of your expenditures set aside just in case. If you find yourself in a difficult financial situation, talk to someone or speak to your bank for help. Checklist for tracking and managing your outgoings. So like we said, set a budget goal for yourself and stick to them. Create a budget that includes some things that you want, so that way you can spend guilt-free. Make sure that you're getting value of your money on everything that goes out of your account. So like Paula mentioned, so if you look at your statements, whereas you guys should do it every month, your account statements, your credit card statements, because if there is a charge on your statements and you did not make them, it's very important that you dispute them. So you have up until 30 days to dispute that transaction with your bank, with HSBC, in order for them to do an investigation to make sure that these funds are not yours. So if it's after 30 days, you are not guaranteed to get those funds back. So you have up to 30 days. Know your spending habits, so that way you stay on top of things and avoid wasting money on things that you don't need. When I go shopping, guys, I say to myself, I look at something that I really like and I'm like, you know what? Is this something I need, or is this something I want? You know what I mean? Just try to understand exactly what is it that you really want. And you say to yourself, if I don't need it, I can actually use that money and put it somewhere else. Prioritize building up a savings. Like I said, at least 3 months of your expenditure. And once again, if you find yourself in a financial situation, please speak to somebody or speak with your bank representative. So I want to talk about the investment side that we have here as well. So we have our World Selection Funds. So the World Selection Funds, they are very diversified funds. They consist of 5 risk profiles. So we have 1 being the lowest risk and 5 being the highest risk. They are diversified funds, so they have equities, it has bonds, it has alternative, it has cash, it has properties in there. So it all depends on exactly what is your tolerance for risk in order for it to be associated with the allocation of the funds that we have. You've got global investments, so you're looking at asset growth opportunity across the world, 2 layers of active management. So this is where it allows the fund manager to be able to reallocate the asset of the fund, so that way it stays in line with your tolerance for risk. And we have our premier relationship managers. We also have our senior premier bankers as well, please forgive me, who can also assist you when it comes to, even if you're looking to, just find out information pertaining to our World Selection Funds that we have. So this is where I was telling you is 1 through 5 of our risk tolerance. So you're looking at if you're in World Selection 1, this is a very cautious fund that we have. So you can get up to, let's say, 5%. So always note that when you're looking at the investment side of it, your principal is going to always fluctuate. So it's going to go up and down in value. So it all depends on exactly how much risk are you willing to take. So if you're in World Selection 1, then you're looking at, it could be, let's say, gaining up to 5%. So World Selection 5, you can gain up to 14%, but it's going to fluctuate. So the higher the risk you have is the higher the gain, but it also can be the higher the loss. So we just have something here, just hypothetically speaking. So let's say you say to yourself in a World Selection Fund, you're able to put $1,000 aside. If you start at the age of 16 to the age of 25, you're looking at a total invested of $10,000. So you're looking at, by the time at the age of 50, you can have like about $60,000 in there. If you end up starting at the age of 26 to 50, you're going to end up with 58,156. But if you start at the age of 16, going to 50, you're looking at 118,120. With our World Selection funds, it can be as low as $100. So it doesn't actually have to start at $1,000. It can be $100. You will have annual reviews with either the relationship manager or the premium banker. So then that way we can find out exactly what works with you, what is tailored for you, what is your objective of your goal. Is it for, Akita, I want to buy a house, you know what I mean? Or I want to put funds aside just to accumulate my wealth. So you'll go through the investment tool, so then that way we can better advise you on a fund that's suitable for your needs. We also have our corporate money fund. So the corporate money fund ties in with the Fed rates. And I can say it's yielding like about 4.21 right now. So you're looking at almost 4%. So that's daily. It does change, but it hasn't been going under 4%. With that said, with the corporate money fund tying in with the Fed rates, so if the Fed rates decrease, that means the yield is going to decrease as well. The monthly dividends are going to decrease as well. The principal stays as it is. So let's say you want to put in $10,000. The principal stays as it is. But however, if there is a major crisis in the market, whether or not it's in corporate money fund or World Selection Fund, your principal is going to change. You may end up with the corporate money fund not get any dividends issued to you. You may end up losing some of your principal because there's always a risk when you're doing investing. I can say in 2008, when we went through the recession, people who were in the corporate money fund, they didn't get any dividends issued. The fund manager was able to reduce the management fee and the principal stayed protected. But we all know that past performance is not an indication of future. And here, just saying these funds with the corporate money fund, they are very liquid. I will say the investment horizon, you're looking at 1 year. It's got here 1 year or less, but it's 1 year that you can actually put the funds in here. These funds are very liquid. If you happen to be in the corporate money fund and you need to take the funds out, meaning a redemption, it takes up to 2 to 3 business days to go back into your US dollar account. And there's no penalty fee to go in or out of the World Selection Fund and the corporate money fund. So this is where it's just choosing the right products for you. So yes, we did talk about the investment side. I have a lot of clients that are not interested in investing at all, which is fine, right? I just provide them options of what we have. So with that said, yes, we have a regular savings account. So let's say your regular savings account, you put funds aside of $926 every month. At the end of that 18 years, you're getting $199,980. We also have a product where it's called a quarterly bonus saver. So the quarterly bonus saver works whereas you're getting a standard rate of 0.05% every month. If you haven't touched it within 3 consecutive months, you're getting a bonus, which is 0.45. So your total for the 3 months is 0.50. So this is where it allows you to contribute towards the quarterly bonus saver. It's just that if you happen to take money out of it within that 3 months, you just don't get the bonus. You still get the standard rate every month. So by looking at this, you're putting in $926 in 17.5 years, you will have a $200,000. So now you're saying to yourself in the World Selection Fund. So the World Selection Fund 3, that's the balance fund. So remember how we spoke about the World Selection, they have 5 risk tolerance, 1 being the lowest, 5 being the highest. So this is where we're talking about the World Selection 3. So this is a balance. So this is, once again, you're putting in $926,926. So in 13 years, it could have a potential of $200,000. So this is where it's like just showing you ways where you have your money work for you while it sits there. When you have an account that is attached to a debit card, you're not getting any interest at all while it sits there. Investments, so you're saying to yourself, you're using money and you're buying stocks and bonds when it comes to the investment side of it. And that's the end of our presentation. So did anybody have any questions for us?
So are there fees attached to those investments?
Yes, ma'am, they are. So when it comes to the World Selection Funds, it's like 1.55%, and that's annualized. That's the management fee. When it comes to the Corporate Money Fund, we have 3 of those classes. So Class A is a minimum of $1 million. The management fee is 0.25. The Corporate Money Fund Class B is a minimum of 25,000, and the management fee is 0.35. So with Class A and B, your dividends are issued into your US dollar account on a monthly basis. So the last one is Class R. So Class R is a minimum of only $10,000. The management fee is 0.65, but the dividends are reinvested back into the fund.
Thank you.
Are there any more questions? Thank you for that presentation, Paula and Laquita. That was very informative. We pulling up spreadsheets over this side.
Yeah. So the thing is, if we've got our contact details here, guys. So if you want to reach out to Paula and myself, we will be happy to have that one-on-one conversation with you guys, just so we can see exactly what are your thoughts, what is it that you're looking to do. You know what I mean? And we both come up with a solution together to help you get there.
Cool. Well, thank you. We'll open up the floor again at the end for questions. But in the essence of time, we are going to move on. We have Miss Roxanne Christopher from CG Insurance. So I will turn the floor over to her. I can see the screen, but I just can't hear you. So not sure if you're talking, Roxanne.
See, I'm always running my mouth, right? And I didn't I didn't have my microphone on. I'm sorry, everyone. Good evening, all. It's a pleasure to be here. And I want to say, full transparency, my son is a graduate of the Mirrors program as well. And Paula, I have to give you love. It's been quite a while since I've seen you. So it's a pleasure to be with everyone this evening. I will do my best to be as brief as possible. Um, So my presentation is called Insure Your Salary, right? That is not something that we speak about quite a bit. We speaking about other types of insurance. You insure your car, you have health insurance, but we don't think about insuring our salary. Like what happens if your family no longer has access to what you rely upon? And so one thing I often say to my clients, and whether it's radio or TV, imagine if you have an ATM machine in your living room and your family is accustomed to getting funds out of your ATM machine every month. So whether that's for mortgage, for rent, for extracurricular, for the car payment, for going to the movies, for groceries, what if that ATM machine automatically one day disappears? How is your family going to remain solvent and survive without that? So it's very important that we look at life insurance as a way of ensuring your salary. So life insurance is a critical tool. And as my learned colleague earlier, Keyshawn, alluded to, it's something that we all should think about and talk about. It's not something I feel that in this particular industry, in this sphere, many of us, and I give kudos all the time to the great corporate citizens that are there. Think about the fundraisers at Rosa's Cantina, the GoFundMe's, all of the potlucks when we are trying to help a family lay their loved one to rest. Because for whatever reason, many of us are so accustomed to just living month to month and don't have the resources that's required to say goodbye how we need to. And so we depend on others. And I know that many of us don't want to be put in that position. And so ensuring your salary is a way to avoid that. And like I said a few seconds ago, and the data I'm going to give you is from local data. It's not from overseas jurisdictions. How many families and households can your family remain solvent without your ATM machine in the living room? And it's actually most households say 1 month or less, right? Because life is difficult and life is real and life has challenges. But we have a way, and there are products available locally to you that can make sure that you're not one of those that has to depend on the GoFundMe and the potlucks and the signature drinks in order to secure your family's future. Addressing the wealth gap, definitely building equity. Life insurance policies can accumulate cash value over a period of time. Now, what HSBC has also said, CG Insurance is the only insurance company on island, whereas your life insurance policy can be used as collateral for any lending that you secure. So let's say it could be for the car, it could be for education, it could be for the mortgage, it could be to send your child to school. The bank may say, Paula may say to you, Roxanne, I'm going to approve you for X amount of dollars for whatever loan you're securing. However, you have to have X amount of dollars as collateral. A life insurance policy with us can be the collateral required for that particular loan that you need. So that's something that that this company is the only company on island that provides that specific type of service. And one thing I'll say, when you don't know, you don't know, right? If you don't know that this policy can provide that service, that's not something you're going to think about. And so that's why it's very important. Some of you may have heard me before. I want to say one of my former students, Alay, spoke up earlier. I'm not surprised. That's my superstar. And I was a French teacher at Delwood, and she was one of my star students at Delwood Middle School. So hi, Alay, giving you love as well. But our life insurance policies can be collateral for you to secure your educational loan for your child or whatever funding that you require. Overcoming barriers. There are many barriers when you think of either a lending institution or even an insurance company. And one thing, there are historic inequities that are very, very significant. I don't run away from it. I understand the fear and the challenges and the perceptions, which aren't always real, but they are perceptions that we have. The mistrust of institutions and affordability concerns. Lots of times people think that a life insurance policy is much more expensive than it really is, which is false. I intentionally make sure that my clients understand that it's something you can fit within your budget. Lots of times my clients can't afford a $500 a month payment. They can't afford a $900 a month payment. However, I say to my young men, and I'm specific, I say to my young men, I know that we have some young people in here, so I'm going to craft my words very carefully. The funds that people spend on a Friday night when they go to happy hours or their lunch or their lobster dinners or whatever it may be, all of the luncheons that you may have can be a life insurance policy fee every month. If you're spending $300 a week on a Friday night or weekend, you can spend significantly less than that on getting a sizable life insurance policy for your family. So take out the perceptions that is so expensive. That's not the facts of it. That's not the reality. And we work within your budgets. Now, I don't want my demographic, my community to overcommit. I'm not trying to make sure that you have this very significant policy, this very sizable policy. Then in 6 months' time, because life happens, as we keep on saying, life has a way of happening. Then something comes up and you have to let it fall to the wayside and ends up lapsing. You want this policy to work when it needs to work. You want it to work when it needs to work. So I would rather you make sure that you have something that can support your family in case that ATM machine drives up. And one thing, a life insurance policy is never going to take away from grief. It's never going to take away from grief. But what it will do, it will give your family a buffer to be able to manage the grief and not have to worry about where they're going to lay their head, if they're going to be able to continue school, if they're going to be able to come out of university. A life insurance policy can be the bridge to help you get through that difficult time. What if something happens? Like I said, who is dependent upon you, right? Who is dependent? I only have one child. But even if my one child is very difficult, I'm in the midst of college tuition right now. I'm in the midst. So I know how difficult it is. Final expenses. 2024, the average funeral cost alone was probably between $13,000 and $17,000. The average cost. There's this perception that cremation is so much more or less expensive. That's not the facts. That's not the facts. That's not the reality. Then you look at future costs. What if you have nursery fees? Nursery fees are outrageous. I see $1,200, $1,400 a month for nursery fees. That's not including rent. That's not including groceries. That's not including car payments, everything else. It's a very costly environment that we live in. Paying off debt, whether it's a credit card debt or other private loans, college education. Let's be conservative, very conservative, and say $10,000 a year. I know in 2025, it's much more expensive than $10,000 a year. And that's not including plane tickets home and spending money and everything else. And let's look at legacy, right? Legacy is very important to me. We always say that we will do anything for our children. We will do anything for the people that depend on us, the people that we love. So leaving a legacy is essential. It's essential. If you can do it. Some people, like when you don't know better, you can do better. Right? And because life has happened to me, life has happened to you. When you know better, you have the opportunity to do better. What is the best solution for you? In your 20s, life is just starting out. You think life is perfect. I'm going to say this true story. I had a young lady come into my office and she wanted a very sizable life insurance policy that was almost $900 a month. She was still living at home with mom and daddy. She didn't pay any rent. She didn't pay any Belco. She didn't have any car payment. She didn't have any children. My recommendation was for her at that particular time in her life, I wouldn't encourage her to get a $900 a month life insurance policy because life is going to happen. She's going to eventually get married. She's going to eventually get children. And that disposable income that she had in her 20s will not be the same in her 30s and 40s and 50s. Realistically, life is going to change. So I would rather make a recommendation to your family that you find something that is realistic and achievable that you can look at. In your 30s, responsibilities are expanding. You may be just starting to have a family. So definitely your disposable income is changing. In your 40s, life is getting more complex, right? So you still want to maintain your life insurance policy over the long haul. It's not just for today, but you want it for tomorrow because you want to be able to make sure that your family has that protection. In your 50s, life is settling down. That's not my reality. That's not my reality. And I'm in my early 50s. That is not my reality. Far from settling down. and in your 60s, retirement begins. That's the goal. But we know many of our grandparents, our aunts and uncles, our family members in their 60s are still working into their 70s because life happens and it's difficult. And 30 years ago, when people thought that their pension, their private pension, was going to take care of them, that isn't the reality of the world that we live in today. And you also have the ability to use a life insurance policy to take care of your family. Whole versus term life insurance. So term life, I like to describe that as my hoopty-poojo. It gets me from Somerset to town. I don't have a car seat any longer. I don't have to put no stroller, no bicycle in the trunk of my car. However, my Peugeot gets me from Somerset to town. It may not look that pretty, but it's going to work when I need it to work. The whole life insurance policy, I use that as the Mercedes that has the heated seats and the heated mirrors, right? You get in the car, you can turn the engine on before you get there, right? That's all the hoops and the bells and the whistles. It provides great coverage. Term life policies last for a term period of time, which means there's an expiration date. So it's not going to last forever. I also use this as telling people, recommending to people, let's say you have someone just coming home from university, they're just starting out. They may have college tuition or loans that they're helping their family to pay for. That loan is not going to last forever, which means it's going to end in 3-5 year time period. And so you will have more disposable income. However, it's giving you some immediate protection right now. You see those ads or TV commercials of like $1 a day type of policies. Those are term life insurance policies. Term life insurance policies only work one time. What that means is a term policy is only going to work when the person, the holder of it, passes away. So it only works one time. From an underwriting perspective, because it only ends one time, it's very affordable. It's very affordable. You're not going to think about it. However, it can give yourself maximum coverage. So it's very easy to have those $2 and $3 million life insurance policies in term. Very affordable. However, it doesn't have a living benefit, which means you can't use it today. It's only going to work tomorrow. And it only lasts for a period of time. Remember, term lasts for a term period of time. Whole life insurance policies. These are the ones that build cash value. These are the ones, the term life insurance policy. So let's say, another example, I had a lady last year, I'm still got to get used to saying this year. Last year, she had to pay a tuition balance so that her daughter could graduate and walk across the stage, right? She pulled money out of her whole life policy so that she can pay the university so that her daughter can finish her degree and walk across the stage and not have to worry about tuition any longer. You can use it in various ways. You can also, so let's say something can happen. You know, let's say we have a significant hurricane. Life has a way of happening, as we all know, and you need some immediate cash. You can pull some funds out of your whole life policy. One thing with CG, we're going to encourage you, but not force you to put the funds back in the policy. So let's say if you get a loan, typically you have to make your first payment 4 to 6 weeks after you receive the funds. With a whole life policy with CG, you can, let's say you get a bonus. Let's say we have educators, whereas they work during the summertime and they take their summer funds, and I'm going to put it back into my life insurance policy of what I took out. You can put it back as you see fit. CG will not dictate how you put the funds back. However, let's say the time comes 20 years, 30 years, 15 years, whenever there's a payout, and you have not put all of those funds back, it will be deducted from what your family receives. Am I making sense to you guys on that? Just nod my head. Okay. So a whole life policy, it's real, and it's not just about getting a life insurance policy when you're older. I encourage my young people to look at life insurance policies. However, there's a difference between a minor policyholder And because as a minor, you can only secure up to $50,000 under the age of 18. If you're over the age of 18, then you can get much larger policies. Okay, so with us, you can secure a policy for a child from the age of 3 years of age, 3 months old. And those policies are very reasonable. It could be $18 a month, $20 a month. Once again, there's a perception that life insurance policies are so costly. That is not the reality. Taking the steps towards financial empowerment. I absolutely believe in empowering our community. It's very important that we know what's available. If you do not know, you cannot take advantage. One thing I want to remind you is that CG is a local company. We are not a brokerage. If you have any issues with your policy, with any questions, you're going to come to CG. You're going to sit in my waiting room. You're going to demand to see Roxanne. If Roxanne's not here, you're going to demand to see someone else. You don't have to go overseas to deal with us. We are 100% locally owned, and we are an insurance company. If you look up the AAA rating, you'll see CG. Some companies, you're not going to see them on AAA rating, right? So your funds are safe with us. Your investment is safe with us. And I'm committed to making sure that my community understands what's available. And community investment is important, right? And I am going to say from the time of when you get your person, your young person, when they're 16, their bike, they look forward to getting their bike. Parents are spending $400 for a helmet, and you're spending $6,000 on a bike. But we're not looking at getting a life insurance policy when road fatalities are the leading cause of death amongst our young people. Those are things that we need to think about. Can we afford a $50 a month policy, but yeah, we're getting a $6,000 a month, a $6,000 bike? We have seen situations at CG where we have had individuals get a life insurance policy. In recent years, get a life insurance policy. However, let's say they didn't bring in their Belco bill, which means that they didn't complete their compliance. There's compliance on all applications. So the policy was invalid, and there was a couple of things they had to do. However, 3 days later, they were murdered. And they had applied for a $400,000 policy. However, the policy wasn't enforced because they didn't complete the compliance. And that person had 3 children. And now that family is now struggling to lay that person to rest. And that family is without, remember I said that ATM machine in your living room? That ATM machine is now gone. What is the family going to do? A life insurance policy can protect your family, not just today, but tomorrow. Don't be fearful. Let's have a conversation. It takes no effort to have a conversation. I meet with my clients during the day, during evening, because not everyone can leave the office 9 to 5. Some people live in Somerset. Some people live in St. George's. We can also meet via Teams or via Zoom. And be confident. I'm not going to recommend anything to you that I don't think your family or you do not deserve. And I think now it's a very interesting time. Like, products have changed. Who would have thought 10 years ago you could use a life insurance policy as collateral for a loan? Now you can. Now you can with CG Insurance. And one of my favorite statements, Keyshawn, you should know this statement. Life insurance is not for you, but who you leave behind. Right? So let's not leave your family and your loved ones behind in despair. When we have an opportunity to make a difference, let's make the difference. And that's it for me, guys. Any immediate questions for me? Did I stick to my time limit?
Yes, we're good. We're good. That was excellent.